You had 70% of a product that most people don't even care about or what it's worth or anything. And that really could suppress the market. I think what you do is probably the best way to look at it, Andy, and that's to look at the nominal gold-silver ratio over the near term, which is around 30, you could say 40. So I think the top of the market will easily be, 40 to 1, 30 to 1. So if gold's at 3,000 at 30 to 1, you've got $100 silver. If it's 40, it's less than that. If gold makes it to 6,000 and you're 30 to 1, you've got $200 silver. I really believe that because, the old adage that he who owns the gold makes the rules may be true.
Given the risks surrounding the global economy, silver could stand out as a potential low-cost safe haven for investors seeking stability. In the previous bull market, silver saw gains of 1,000% over the previous lows when it established the current all-time high of $50 per ounce in April 2011. Known widely as the Silver Guru, DavidMorgan envisions silver potentially reaching $200 if gold rises to $6,000 an ounce, underlining silver's critical importance in the technology. In his analysis of the silver market, Morgan predicts that increased demand could lead to a supply shortage. He highlights a significant rise in industrial demand, which has jumped from 35% of the market in 2000 to 60% today. This shift underscores the evolving dynamics of the silver sector. According to one projection, the clean energy transition could dramatically increase the demand for silver in photovoltaic technology, potentially consuming between 85% and 100%, jaw-dropping 98% of global silver reserves by 2050. Based on observation, Morgan emphasizes that institutional investors often opt for larger commercial bars. He highlights that in 2020, these investors acquired a record 520 million ounces of silver for investment. Moving forward, he shares insights from the World Economic Forum, where an expert noted silver's appeal due to its low price relative to gold. He remains skeptical about remonetization without a significant increase in market size, but emphasizes silver's unique investment potential today. Notably, if China begins buying silver at just 10% of its current gold purchasing rate, this could drive demand to around 20% of the mined silver supply, further underscoring the metal's growing importance in the market. Now we present the clips of DavidMorgan's insights from his recent interview with Miles Franklin. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Well, obviously, the way you've answered your own question, it's happened before, so it can happen again. As we outlined, 1% of the money markets move into silver's 2-year supply. So the inference is rather strong. Logic would dictate that, look, chances of running out of product is very likely if the demand surges. And again, it's happened in the past. And I think to make the distinction that I've made previously is, the two markets of the silver market. I'm not talking about industrial and monetary or investment. I mean retail silver and industrial silver or commercial bar silver. And sometimes we can have a retail shortage, and yet the silver market, which I refer to as, the derivatives market, that is backed by a small amount of physical 1,000-ounce bars relative to the amount of paper that's traded, it nonetheless exists, and that's what sets the price, or that's what backs the price, as long as the supply holds. So my point is, Andy, that, yeah, it's going to happen, and I think it could happen in several ways. But one that I think is one that is not really talked about too much, and that is not the industrial supply, which has been eaten away, but industrial demand. So think about that. It was 35% of the market in 2000. It's 60% of the market now. And the supply of silver on an annual basis for mining has gone from 550 million ounces annually to 850 million. So that's a huge increase. In fact, if you didn't increase the mine supply from 2000 till now, had that same number, 550 in the amount used, you're looking at like 70 or 75% of the market would be industrial. But I digress. My point is institutional investors, because institutional investors buy commercial bars for investment. When Buffett bought 130 million ounces of silver, he wasn't buying 100-ounce bars. He was buying 1,000-ounce bars directly from the COMEX. And he's the last one to do that. They changed the rules after he made that purchase. So I want to go on. If you look back to 2020, we had 320 million ounces of silver, meaning 1,000-ounce bar silver bought by institutions through the ETPs, and our what's normal these days, 200 million bought by retail. So I can add that in my head. That's 520 million ounces of silver bought for investment purposes in the year 2020, the year of the illness. And that is over half the market. It's a billion-ounce market, mining and recycling combined. Now, I am going to ascertain that perhaps this is what happened. In Davos, that are known as the WEF these days, Scott Meener was asked by Bloomberg financial guys, what was his go-to investment that year? And he said silver, and these guys practically fell off their chairs. Silver? They didn't know what to do. I mean, it really shocked them. And so one of the guys recovered, I'm exaggerating slightly, and said, well, okay, why not gold? And Meener said, because gold is very close to its all-time high. But silver is off, I forget the percentage, Andy, 40%, I forget. It was a big percentage. And it represents a better buy. Now, I'm not saying as the chief investment officer for Guggenheim that he bought 300 million ounces of silver in the ETPs. I don't know. But somebody did. And that's all of it, more or less, over the next couple of years was sold back into the ETPs, or into the market, I should say, off the ETPs to somewhere. All it would take is one or two, instances like that. And it's interesting because it's my belief, and this gets a little bit on the, put your hat on. It's well known amongst the banksters that you really couldn't touch the silver market in size because it's such a small market. And people say, well, silver be remonetized. The answer is I don't know, but I doubt it unless it really gets to gold-silver ratio that's meaningful.
Regarding the potential market, DavidMorgan points out that most silver comes from byproduct mining, where primary miners often undervalue it. This neglect can suppress prices, but streaming agreements from companies like Wheaton Precious Metals help capitalize on silver's potential. More than 70% of mined silver is a byproduct of other metals, such as lead, zinc, copper, and gold. Zinc prices have been weak, prompting mine closures. Last year, a major mine in Mexico, the world's top supplier, didn't operate for 4 months because of a strike. While recycling can compensate for some of that shortfall, it typically accounts for less than 20% of the total supply. Meanwhile, industrial demand for silver is rising, especially due to its essential role in solar panel manufacturing. According to the Silver Institute, solar demand surged 158% from 2019 to 2023 and is projected to grow another 20% this year. In his discussion, Morgan highlights a recent Financial Times article about 5 major banks facing losses from short positions in silver. He criticizes their prioritization of industrial users over individual investors and warns that this may complicate the market further.
70% of the silver market is byproduct mining. And the problem with that isn't that they get silver with lead and zinc and gold and copper. That's not the problem. The problem is how it's treated. It's treated like a red-headed stepchild, as the expression goes. Because a copper miner could care less what the silver price is as long as their bottom line, copper mining is making a profit. So they look at silver as the stepchild. They don't care what it's worth, and they wholesale it out for practically nothing. It's a bookkeeping entry against their primary business. And the same is true in lead, zinc, or gold. I mean, the gold mining industry produces 13% of the silver. So if you had 70% of a product that most people don't even care about it, or what it's worth or anything, then that really could suppress the market. And the other part of it is that our industry is pretty smart in the ingenuity of the human being, because people like Chap Mercantile, the forerunner to Silver Wheaton, which is now Wheaton Precious Metals, saw, hey, if you don't care about this silver, let us buy it from you as a stream. We'll give you some financing. Here's what we'll do. And so that started a whole new industry, basically, in the mining industry or the royalty space. So I did go off on a tangent, but there's a lot of these factors that are aligned about silver that obviously I think about a great deal, but I want to say it's glossed over, Andy, but it's not put in the proper perspective. I just put up a new Twitter. I did this for my members. I put the article on Twitter. Financial Times, very short article. It said that 5 major banks are in dire straits, my words, not theirs, for a massive short position in the silver market. Boy, it brought back memories of Ted Butler. And actually was basis a couple of days before the Friday close we're talking about. It was above 33. We're upside down $1.2 billion in silver and $1.5 billion in gold based on the recent move. And that they had to do something to protect the industrial users of silver and the financial markets. I actually read this to my membership because I thought, wasn't that interesting how these entities are going to make sure that the financial markets and the industrial side are protected. What about the investors, you blankety blank, 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 blanks? I mean, your edict is supposed to be a fair market, unencumbered. Market forces are supposed to dictate what the true settlement is. And yet you're going to jump in and be real do-gooders to make sure the financials. So then what happens, and this is getting to your exact question, you already know the answer, just reminding you or refreshing the audience, they'll start raising margin requirements up and up and up and up, and that will take care of all 5 banks.
The market would be roughly balanced if not for investors' taste for silver coins and bars. According to the global head of commodities research at Citi Research, this year's silver rally has been partly driven by investors looking to precious metals as a store of value on signs of weakening in the U.S. economy. Given these dynamics, how should investors position themselves in silver as demand grows? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.